you might say, well, why does Bitcoin need to show strength? Well, it doesn't need to, but the bottom line is when you have a stock market rallying, it's telling you that there's risk on. And generally Bitcoin, 2 times does that risk minimum, maybe 3 times. So if like the NASDAQ goes up 2%, oftentimes you'll see Bitcoin up 4 or 6 or 8%. You haven't seen that here. And that has to be something that you pay attention to, because I think what's going on here is that yeah, so I think the bond market is always the truth teller, right? I mean, the Fed has said many things over their long career of kind of managing the monetary system. And for the most part, they're not really right that often. So I think the bond market is dead on here. I think you have to look at, the GDP numbers. You have to look at the economic slowdown that you're seeing. Corporate earnings have come out recently, and we're seeing a lot of companies saying things are slowing down. They're lowering guidance. And the Fed is sitting there and they're saying, hey, listen, the jobs numbers are good, so we're not in a recession. And I mean, this is what drives me nuts, is that everyone knows that jobs are a lagging indicator. So, whatever jobs numbers are now, in 3 months, it will reflect today's action or what the economy is showing today. So I'm not sure why they're doing that. If they're, they've got to know it's a lagging indicator. Maybe they just don't want to admit defeat and say, hey, we're going into a recession. I think also part of it is that we know we have high inflation. If they throw in the towel and say they're throwing in the towel, then you're going to see the markets get very tumultuous, and very possibly inflation won't come down as much as if they kind of say they're going to still be hard-nosed. So, I mean, it's a mess of a situation. I don't know if there's any easy way to get out of it for the Federal Reserve, but certainly I agree with the bond market. I think we're heading into a recession by later this year, and the Fed only has a little bit more rate hike to go before they're going to have to stop. Yeah, so that's super, super important. And in fact, we'll take a look at the charts here and take a look at the S&P. We'll flip over to the S&P here and take a look. So basically, you're right. We've had this beautiful rally. You could see we were stuck in this channel. We broke even above the channel, which shows relative strength. And we're kind of coming into this area right here. So we are coming into resistance in the near term. If we draw a trend line right there, you can see from this pivot high, we're now retesting that same high. And I think it's important to recognize that the markets don't necessarily move on the economics of things, but more so on the Federal Reserve. So if you think back to, 2009 or even 2000, what drove the markets? And the answer is it was quantitative easing. It was the low interest rate policy. It was money flowing into the system that kind of made stocks go up. Even, with COVID crashing the economy, the Fed was able to flood the markets with enough liquidity that stocks ripped higher. I mean, we had some of the best years following the initial drop in March 2020 from COVID. So I think that's what's driving the markets here. The markets are sensing interest rates aren't going to continue to go up forever. They're thinking that the Fed is almost done, which means cheap money could be coming back to us, let's say in a year or so. And I think that's the key here. That's what's driving markets. And this is the kicker, though. And this is what scares me about the stock market, as well as eventually crypto after a little bit more upside, is that the market expects the Fed to be able to come out and print more when we get in a bad recession. And I do think we're headed there. And my thesis is that we're not going to see the Fed do that. In fact, they can't do that. And the key here is understanding that even if inflation comes down to 5%, how do you print trillions of dollars? How do you expand your balance sheet again when you have 5% inflation or even 4% inflation versus below 2%, which is where it was for such a long time? So when the market realizes that the Fed cannot come out and just print us out of the next recession, you're going to see all out panic hit the market. It is going to be a decision. And I think the way I view it is there's going to be kind of this kind of weight, right? So you have like one of those weighting machines where, one side's heavier than the other and it goes back and forth. So right now inflation is high, so they can't do anything about that. If inflation comes down to, let's say, 4%, but assume in an economic catastrophic event, unemployment goes to 12%. With 4% inflation, but 12% unemployment, I do think that they would start printing money again because it's the lesser of the two evils. The problem is there's no good end game here. Like you could do that back and forth for 5 years, 10 years, 15 years. all you're going to do is just crush the overall economy in the long run. And you're going to have a meteoric reset in the system where the dollar eventually collapses. So it's crazy scenario, but investors in today's day and age, we have to be so aware of the long-term implications and really protect ourselves. I mean, whether it's Bitcoin, whether it's gold, whether it's other things, we have to be aware of what ultimately is going to happen. So one of the interesting things is I went bearish on the dollar right up here recently over the last, this is the monthly chart. So this is actually last month. And you could see the reasons why. And you guys know I'm a pure technical trader. So it told me that the dollar was going to pull back, which interestingly enough meant the stock market should rally. And again, a dollar pullback means the Fed is going to be less hawkish, less apt to raise interest rates. So all those things came to fruition. And what's fascinating about the dollar chart is the dollar chart was telling you that was going to happen. It told you ahead of time that the Fed was going to back off because it was into resistance. And what happens when you hit resistance? You pull back. And so I think people have to understand that the dollar is made up of there's many currencies out there. There's the yen, there's the euro, there's the dollar, there's other currencies. And the dollar strength doesn't necessarily tell you that the dollar is invincible. It still tells you that we're the biggest and the best on the block. So, the European Central Bank, they've been printing, the Japanese Central Bank, they've been printing, China's printing like crazy, and we are too. So when you have everyone printing, then the dollar still maintains its superiority as a safe haven asset. And we know that from the past 20, 50 years, when there's fear about a bad recession, a war in the Ukraine, all these things, it tends to drive money into the dollar. So I think that's the key here, is understanding that when it's kind of like the best on a bad block type scenario, but that's why the dollar has been stronger for people going into safety from other currencies as well as safety against recession and so forth. Exactly the beauty of it. I always say to people, charts are truth, meaning that, you can go on, listen to the news, you can read stories online. There's always bias in that stuff. I mean, even if someone tries not to have bias, we inherently have bias. But what you can't do is say that a chart has bias. A chart is just showing you the general price action of basically millions and millions and millions of investors. And if you can read those patterns, it tells you the likely scenario of what's going to happen. Yeah, so there's no denying that this looks like a bearish channel again. So I do still think there could be a little bit of upside. I'm surprised, honestly, that Bitcoin hasn't shown more strength. And the reason why, you might say, well, why does Bitcoin need to show strength? Well, it doesn't need to. But the bottom line is, when you have a stock market rallying, it's telling you that there's risk on. And generally, Bitcoin, 2 times does that risk minimum, maybe 3 times. So if like the NASDAQ goes up 2%, oftentimes you'll see Bitcoin up 4 or 6 or 8%. You haven't seen that here. And that has to be something that you pay attention to, because I think what's going on here is that, so Bitcoin has floated up, but you're not seeing the same bang for your buck as the technology stocks because of Voyager, Celsius. I mean, there's definitely this fear amongst average investors that got burned, that their money got locked up in some of these fiascos. And so I think you're seeing less interest as a risk asset of going back in. Now, I do still think we could go test one more time the high here, get up to about 25,500. But I have to be honest, I still have a downside ultimate target of 12 to 13,000 on Bitcoin. So I do think there's another leg lower. You can almost see the writing on the wall now, because if let's just say the NASDAQ starts to really tank again, and it's already we're seeing the NASDAQ's like 20% off of its lows, or 15%. So, imagine the NASDAQ just drops 20% back to its recent lows. You can't tell me that Bitcoin's not going to at least break the low here and head lower. And really, if you're talking, the low I think was 17,600 or whatever it was. Really at that point, you're not that far away from 12 to 13,000. So I do think you have more downside, unfortunately. I love Bitcoin long term. I think it's exactly what the world needs, but it has to get this flush out. You haven't seen enough retail investors get freaked out to the point where they actually start talking about it not being worthless, like we saw in 2018 before the 2019-20 started to move up and 21 run up. So I think that also has to happen. And I still think you have to make a lot of these other coins go to zero. Not necessarily the top 20, 30 coins, but there's so many junk coins out there. If you look at the .com era, there was a major flush out and the best survived. And that's actually the healthiest thing thing for it to happen. So I think, again, on a technical basis, I've calculated it out. 12, 13,000 will be an interesting target. I'm hopeful that's the low. I'm going to start accumulating as we get below here, back into the teens for a longer term kind of hodl position. Yeah, that's exactly what I'm thinking. You can see, by the way, this is the NASDAQ 100, but look at how vertical this channel is. And by the way, look at this trend line here. And look at this upsloping, and basically price is there. What that tells me, by the way, is that tomorrow we have the jobs number, and it wouldn't shock me to see a drop in the NASDAQ based on the fact that we're hitting such good resistance here. But the bottom line is, if you start to see the NASDAQ rolling over, at some point this channel gets taken out, and then you got to think Bitcoin's channel gets taken out. And again, Bitcoin's channel, look at how flat it is comparatively. I mean, it is just so flat in terms of a bearish consolidation pattern. So I do think that's exactly it. The next kind of risk off period takes Bitcoin down to that 12 to 13,000 level. And again, I think that's where you have a chance at making a bottom. There's a small chance that, I kind of do the comparison where I look at the Amazon chart from 2000, because I kind of say, hey, look at Amazon today. That's where I envision Bitcoin being like the biggest player on the block. So what did it do? What did Amazon as a .com do when the .coms collapsed? And Amazon actually dropped about 95%. So that's my real worst case scenario. I think my goalpost right now, my kind of common sense target is 12 to 13,000. But I do want people to be aware that there's always a chance that you could see that 95% drop, which takes us back to about 3,500 on Bitcoin. Now, again, Amazon at that point was, if you took away the split, it was about a $6 stock, and then it went to like 3,500. So again, then map it out where Bitcoin could go later on, and that's why I'm so long-term bullish on it. But it certainly is. I mean, this is unprecedented in terms of Bitcoin's history with everything going on. The Fed, Bitcoin's never experienced a tightening phase like this, inflation this high. It's only been around since 2009. Is that as much as I think it's going to 12 or 13, at this point, if you've ridden it down from 65 or 69, the question is it worth dumping some of that position and trying to buy lower? It's hard for me to give advice on that because it's such a tricky thing. I wouldn't want it to hit 15,000 and then start its next bull run and then people miss out on it. What I like to do is basically I would just say, if you're still in it and you've ridden it down, I don't know if I'd take the risk of exiting if at these levels. I mean, even, if you think about from 69 to 22 where it is, that amount of drop. I mean, if I'm saying it's going to go to 12, it's only another $10,000. It's the equivalent of from 65 going to 55. It's not that big of a move. So just so everyone knows what I'm looking to do, basically below 20, at 19, I put 1/6 of what I want to own as a hodl position in Bitcoin into a portfolio, right? And basically every 2 to 3,000 down, I'm going to add another 1/6. So I'll have 2/6, 3/6, 4/6, 5/6 of a position, and then finally a full position at 6/6. If it gets below 10,000, that would be my last add right there. So I would say to people, I mean, you got to choose what you're most comfortable with. But my recommendation is at this stage, just dollar cost average at this point down. Just do it slowly so you can space out your buys. And then eventually I do believe that you see 100,000 on it, maybe 500, even a million down the road. If there's one thing you learn in bear markets, it's that education and learning how to read charts is the most important thing. I mean, think back to all the people that were buying at 65 or 67 or 68, and then look at where it is now. If you knew the charts, you would have never even gone close to buying at those levels. So use this period to kind of educate, and you'll save yourself in the future. And I think that's so important. So education is number one for sure.